Time to take some gains off the table. We've been talking about that, or buy some more. We've got some advice for you. Scott Martin, Managing Director of Investments at Astor Asset Management, and Tom Lyon, President of Global Trends Investment and author of the ETF Trend Following Playbook. Join us here. Good to see you guys. Scott, first to you. It is ironic. Liz and I were just talking about it. Is now the time? I mean, we've had some great gains since March, but it looks about tapped out now to me, doesn't it, to you, the market?
Oh, David, it's been like that the last couple months, hasn't it? That's what makes it so fun. I mean, I'll tell you what, I think that, David, I think the market's in actually pretty good shape the rest of the year. I think there's a lot of people getting in here that have been out and just like you shared, have been trying to get out and have sat in the sidelines and watched the market move 5%. But I'll tell you what, David, there's a way to play this, I think, on the upside and downside with an ETF like XPH, which is pharmaceuticals. And basically, it's a lower beta ETF, which means that if the market goes up, it may not go up as much, but it won't go down as much on the downside. And so you can play it kind of on that side if you still want to get some money in there, but not take as much risk.
Okay, so let's look, Tom, at what exactly people should be doing right now, especially when a month ago there was so much fear in the market. I'm not so sure it's gone, but anybody who was too scared and went straight to cash has probably lost out on some pretty significant days.
You're right, Liz, and it seems to be the case. More investors believe the market's going to go down than go up. So I agree. I think the market's in great shape. I think going forward, as we look to the holiday season, there might be some opportunities in some of the retail ETFs. The Select Sector SPDR retail ETF, along with the iShares Global retail ETF, both offer some great opportunities, especially in value-oriented stocks like Walmart, Amazon, Priceline, and it may not bode well for you getting that blue box and those Jimmy Choos under your tree this year.
I resemble that remark.
We should mention, by the way, if Macy is a part of the mix, is down 9% today, so they're not all doing well. But Scott, I got to ask about interest rates because so many people continue to be optimistic, place a lot of their bets on low interest rates. The Fed says they're going to keep interest rates low, but they're artificially low. Everybody admits when you're taking gains on the basis of something that is artificially imposed, like zero interest rates, you're taking a gamble.
Yeah, David, and you know what happens when that goes against you is it snaps back pretty quick and you got to run for the exits. David, the market's already, I think, telling the Fed somewhat that rates have to start going up, and whether that's Q1 or Q2 of 2010, that's anybody's guess. But I think that's the big surprise of 2010, and there's ways to play that. There's ETFs that play a rising rate environment, but look no further, guys, than the dollar, obviously, but also the gold market today to show that the market is still convinced that the Fed is going to hold pat here, and they're going to play those asset classes in response.
Okay. When I look at what you're doing, Scott, you like XPH. I want you to explain to viewers what that is and why you look at it as a possibility of a play on the healthcare bill passing.
Sure, Lizzie. It's basically a conglomeration or collection of pharmaceutical companies. So you're looking at like Medicis, Abbott Labs, and with the healthcare passage going to the Senate now, I think it's a great play because you're going to see a lot of business activity in these companies aside from M&A. And as you see more